Today, I'll be looking at an essential topic for anyone considering taking out a mortgage, and that is 5 factors that can affect and reduce your mortgage affordability. Now, I won't be covering the obvious ones like income and outgoings, but I'll be exploring 5 lesser known elements that can have an impact on your ability to secure the mortgage that you need. So to find out more, stay tuned. Now, before we get into the video, guys, to show your support for this channel, if you enjoy the content, I want you to consider using DM Mortgages to arrange your next mortgage or remortgage. And to do that, you need to head over to our website, which is dm.mortgage, and there you can book in for a mortgage appointment with a member of our mortgage advice team. And make sure that you hit the subscribe button and the notification bell so that you don't miss any future uploads. Now, the first factor that you need to be aware of that can reduce how much you can borrow is the size of your deposit. Now, the larger your deposit, the lower your loan to value ratio is. So loan to value is the percentage of the property's value that you need to borrow. Now, a higher deposit reduces the lender's risk. So for that reason, some lenders will increase the amount that they lend to you based on the fact that you are putting in a bigger deposit. So the next point that I want to talk about is the choice of lender. And sometimes, guys, even the product that you choose can reduce how much you're eligible to borrow. So every lender has, of course, different criteria. Every lender has an upper limit in terms of income multiples that they will allow their borrowers to go up to. So, for example, there are some lenders that will cap it at 4.5 times income. Some lenders might go up to 5, some even 5.5 times. And this is largely based on the lender you choose, your individual circumstances as well, because some lenders might say if you earn in excess of 75k a year, then we'll increase the income multiples that you're eligible for. So there's loads of different factors that can influence how much you can borrow, and that's ultimately often down to which lender you choose. Now, some lenders will even allow you to borrow more depending on what product you choose with that lender, because some lenders will stress test their products differently. So again, it's just really important that you do get advice from us so that, again, depending on your goals, we can align you with the right lender depending on what it is that you're trying to achieve. But be aware that the lender and sometimes the product can reduce how much you can borrow. As a viewer of this channel, I assume that you're considering purchasing a property in the near future. So it's important for you to know that DM Mortgages are an award-winning team of fully qualified mortgage brokers that provide advice to clients all over the UK. Now, we spend countless hours making free content for YouTube and other social media platforms to help to give you guys sound and useful information to make sure that you're in the best position to make informed decisions. To support this channel when the time comes for you to consider your mortgage options, we want you to book a free online mortgage appointment with a member of our fully qualified mortgage advice team. Because without your help and support, keeping this channel going simply isn't possible. Now, we search thousands of mortgage products from high street and specialist lenders to find the right deal for your circumstances. And we also provide a free will writing service to every DM client. So head over to dm.mortgage and book in for a free mortgage appointment when the time comes. And also make sure that you subscribe to this channel if you find the content useful. But for now, let's get back to the video. Now, the next point I want to talk about, guys, is your age. Now, yes, age can be a crucial factor when influencing mortgage affordability, particularly for older borrowers, because an older borrower might find it difficult to borrow higher amounts due to having less time before retirement to pay the mortgage off. So lenders will often look at how long left you've got to work, and will look at what retirement income you have, if any, when assessing affordability. So understanding how your age impacts your borrowing capacity can again help you to realistically plan a time scale to get yourself on the property ladder. Now, it's also worth me mentioning that some lenders, again, will allow you to borrow up to age 70. Some will allow you to go up to age 75, some even longer than that, just relying on your earned income. So again, this goes back to my previous point. in that the choice of lender is also crucial, particularly for older borrowers in this scenario. But just be aware that the less time you've got left to work, that's going to make it more difficult to borrow higher sums of money. So again, you may find that your borrowing capacity is limited. Now, the next thing to be aware of is debts. Now, having debts can impact on how much you can borrow, because lenders will assess what's called your debt to income ratio. Now, that's the percentage of your income that goes towards debt payments, and high levels of existing debt can limit the amount that you can borrow for a mortgage. So it's really important, guys, that you manage, and it's good to reduce your debts before you apply for a mortgage. But the one thing that I will also say is, don't think, okay, because I've got debts, it means I can't get a mortgage. It's still a really good idea, guys, to check in with us and see what your position is, because it's not as black or white as just saying that having debts is going to impact on you, because depending on how much that debt is and how much that debt is relative to your income, it may not actually affect you at all. Sometimes people have debt, and when we run calculators with and without the debt, it doesn't make any difference to their borrowing capacity. Sometimes it has a bigger impact than others. So the point being that, generally speaking, obviously having less debt is preferable, but don't necessarily let that put you off. It's still worth exploring and looking at what you can borrow with and without your debt, and then seeing what the overall position is. But generally speaking, high levels of debt can ultimately reduce your mortgage affordability. And the next point that I want to mention is financial dependence. So the number of financial dependents that you have, again, is a key consideration for lenders when they're looking at how much they should lend to you. Because the more dependents that you've got, guys, obviously that means higher living expenses. So it influences how much you can comfortably allocate to those mortgage payments. And lenders will assess this when you apply for a mortgage. So of course, if you've got 3 children, then there's not much you can change, around that. But the reason I highlight this point is because I think that it allows you to plan a suitable timescale for home ownership. So, if you're someone that's thinking of starting a family, then again, maybe you may want to adjust your timescales depending on how many children you're planning on having. Because again, of course, having 5 children is going to impact mortgage affordability much more than having 1 child is. But it's just a point to be aware of. And there you have it, guys, 5 not so obvious factors that can significantly impact your mortgage affordability. And I think it's important to understand these elements before you embark on the journey to home ownership. So if you found today's video insightful, then make sure you give it a thumbs up and subscribe for more tips. And make sure that you head over to dm.mortgage to book a free mortgage appointment with our mortgage advice team if you're considering getting a mortgage or remortgaging. And until next time, I'll see you in the next video.